This is how I became a self-made millionaire using business credit. It all started when I read the book Rich Dad, Poor Dad by Robert Kiyosaki. And inside the book, he explained the process of buying these assets, real estate properties, and building up your cash flow so that the passive income from these properties is higher than your monthly expenses. At that point, you would be financially independent. But the problem that I had is I didn't have any money to go buy these assets. And when I reached out to large national banks about getting credit, I found it difficult to get funding from them. That's what brought me to business credit. You see, business credit's very powerful. It doesn't show on your personal credit report, and there's practically no limit to how much business credit you can get. The process that I used was working with local community banks and credit unions that lend their own money. It's a lot easier to get funding from these smaller banks. You see, these smaller banks, they're called portfolio lenders.
And the way that I learned about portfolio lenders is I saw my dad walk into a bank one day to get a loan for his first investment property. Now, we didn't come from a lot of money. As a matter of fact, as a kid, we were on food stamps. So we didn't have a lot of financial qualifications. And yet he walked into this local community bank. It was a one-branch bank, and it was in the same town as the property is in that he was looking to buy. He ended up walking out of that meeting with a commitment for a loan.
And I thought to myself, how is that possible?
And what I learned is that he actually met with a lending committee. You see, this small bank is a portfolio lender. That means that they lend their own money. And because of that, they took a specific interest in the project that he was doing. And as a result of that, they lent him the money because they're taking an interest in that local area. You see, if you work with big national banks, they try to fit you inside of a box. And if you don't fit, you're not going to get the loan. But if you work with portfolio lenders or small community banks, these local community banks and credit unions, it's a lot easier to get funding for your deals.
There's lots of information on my channel about how to get business credit. But the quickest tip that I could share with you is to open an account with NAV. You have to get the paid account because you're actually going to pay them to not only track and monitor your business credit score, but they'll boost up your business credit score as well. This is the quickest way to set up your company in such a way that banks are willing to lend to you. So once I had my company set up and my business credit profile set up, it was time to reach out to banks to get funding. Now the method that I use is called the burr method. That's buy, rehab, rent, refinance, and repeat. At the time when I was investing in real estate using business credit, so not using any of my own money, we didn't have a fancy acronym. I was just looking for a way to get those cash flowing properties with little to no capital. The way that the burr method works is that you need to buy a property that's undervalued in a community that you want to invest in. I picked an urban community. So I could buy single family, 2-family, 3-family properties for a relatively an inexpensive price. And in this urban area, a lot of these properties needed work. That's crucial for the burr method, is that there has to be an opportunity for you to add value to the property. So either you have to buy it really cheap, or you need to be able to do a lot of repairs to bring up the value. The area that I picked was within a half-hour drive of my house, Newark, New Jersey. One of the first properties that I bought is on Gladstone Ave in Newark, New Jersey. I bought it for under $100,000. I put in repairs of about $50,000, and it's now currently worth about $400,000. So it has roughly over $250,000 in equity on that one property. Now, what I did was I did a combination of buying the property with business credit as the down payment. So you can use either business credit cards or business lines of credit. I use a combination of both. In addition to the down payment, I also needed a hard money loan. So the combo technique is using a hard money loan and business credit as your down payment. You put it together and you buy the property with $0 out of pocket. After you fix up the property and you rent it out, you can refinance the property with many of the same banks that I was talking about earlier that are portfolio lenders. These are local community banks and credit unions that lend specifically in that area. What's great about working with local banks is many of them don't have seasoning issues, which means as soon as you have that property rented out, you can refinance the property and get your money back. If we compare this to doing deals in your personal credit name, you'd have to wait a year before you could refinance and get your money back. But with this business credit model, I can refinance and get my money back as soon as that property is rented out. So it could be as little as 90 days. I ended up repeating this process over and over again to a total of 14 cash flowing properties.
And what I found is that it was easier to do this project in one small area, so I didn't have to drive all around the state. So I focused in on 1 or 2 counties in my state. This makes it a lot easier to manage your contractors and property management.
One of the best things about this process is that after you refinance the property and you pay off the business credit and you pay off the hard money loan, in many cases you'll actually have money left over. Those are the cash out refi proceeds. And you could actually take that money as your paycheck. Or you could not take that equity and leave the equity in the property and just enjoy more monthly cash flow. So as a result of this process, I got into the property zero out of pocket. It's paying me every single month a positive cash flow. And we have $250,000 in equity in just this one property. So the question, of course, is how many do you want? Now, there's a few challenges that you're going to run into as you follow this process. It's super important that you have the right management in place and the right contractors in place. So I would recommend joining a local real estate investment club or even Facebook group. Get to know the other people that are investing in that community. Become friends with them. Find out which property managers they're using, which contractors they're using. That's literally what I did step by step. This rinse, wash, and repeat process has been extremely beneficial for me, and I hope it helps you out as well. If you like what I share with you, hit the thumbs up button. And if you want to see more videos on this topic, go ahead and subscribe and hit that notification bell.